Sup, freaks? It's your boy Marty here to introduce this rip of TFTC. Thank you for joining us. Give this video a like. Subscribe to the channel. If you catch us on podcast apps, make sure you subscribe there. Give us a rating, a review. Go to tftc.io as well. Become a member of the site. Join the conversation. Truth for the commoner, trying to get you the high signal content in a world gone mad. This rip was brought to you by our good friends at River. River's here to make it as easy as possible for you to buy Bitcoin and then take it into self-custody. Go to river.com/TFTC, set up an account today, and you'll get $5 of Bitcoin after you buy $100 worth of Bitcoin on River. You can dollar cost average into Bitcoin with no fees. If you're just buying one off, River has the best fees in the industry. They back all their Bitcoin reserves 1-to-1 in multi-sig cold storage. They highly recommend that you take self-custody. They just introduced limits. So if you want to set a limit order below or above the current Bitcoin price, River makes that extremely easy as well. They also have real customer support. You can pick up the phone and call them if you have any questions about your experience on River. So go to river.com/TFTC, set up an account today. Enjoy this rip.
I'm good for like 90.
All right, you're good for 90. Now the freaks know that. We have 90 minutes. We're recording. Harry. We were just trying to determine how long it's been since we last sat down here on TFTC to have a discussion for this audience. Obviously, we've had many conversations outside of TFTC between now and the last time we recorded here, but it's been too long.
Did it really happen if the freaks can't hear it?
I don't know. Well, luckily.
I have a puppy. It's Pepper.
Pepper.
Here, we can get a little. Oh.
What's up, Pepper? You look warm.
Yeah, not a winter dog. Needs a winter outfit.
Yeah. So a lot has happened. Big week. I mean, maybe we should start there. It's been a big week. Big 7 days.
Big week.
Big last couple of months. Griid. Getting through the SPAC process. Finally live in the public markets. We announced last week that you joined 1031 as an advisor. And again, a lot has happened since the last time we recorded and today. I guess let's start there. What has the week been like, and what was the build up to the last couple of months been?
The it's the old saying, like, there are weeks when a decade happens and decades when a week happens. And for us, we didn't start the business expecting to be a public company in 2018. But that's kind of the road that we ended up on, for a lot of reasons. And, the reasons why we felt that the public market was the right place for us was really just, around sort of our Bitcoin ideology and goals, which is that being able to put shares into lots of people's hands and make them available serves as another vector around getting, Bitcoin and hash rate decentralized on an ownership basis. And also, it's obviously a high capital intensive business, and we're better to do that than in the American public markets. So we're thrilled to be on the other side of the deal. We're thrilled to be Nasdaq listed. And, more than anything on my mind is, let's get back to work. We got a business to grow.
Yeah. Yeah, we all do. And it feels like the timing's perfect. A few months before the halving. The winds of a potential bull market seem to be blowing in the distance, getting closer.
I wake up every day and Bitcoin is more useful than it was the day before. Other people are catching on. Pete McCormick and I talked about this a bunch, but like, we're sort of at the end of the beginning. Feels like ETF land took us to the end of the beginning, or maybe the beginning of the middle. And that kind of makes sense, right? Like the internet 15 years in was at the end of the beginning. The big killer apps hadn't sort of emerged. We weren't on 3 billion smartphones yet, but all of that was sort of yet to come. And I think, in our Bitcoin journey, we're at a similar point where, it's not niche and early anymore. It might be early in terms of price, but it's not early in terms of mind share. Bitcoin's a household name, and it's a word that everybody recognizes at this point, for good or for bad. they might have their own, positive or negative association with it, but we're not a shadowy corner of the internet anymore. And that's exciting.
No, it really is. And we just had the Energy and Mining Summit in Nashville, which was hyper-focused on the mining industry and where it is in its maturation phase and where it may be going in the future. And since we have you on and your deep knowledge of the mining sector, particularly here in the United States, I think maybe you don't have to talk about Bitcoin too broadly, but hone in on Bitcoin mining as an industry. What has happened over the last 2 years since we last spoke? Where are we now, and where may we be going in the next 2 to 3 years?
Yeah, I mean, the really great part about what's happened in Bitcoin mining is that the business model, the size and the scale, all of those types of dynamics have gone through maybe an even more aggressive maturation process than Bitcoin has. We're seeing, home miners are doing all sorts of new kinds of things. We had a panel about, what we called Citadel mining, which is, everything from one miner in the garage to, one of Steve Barber's hash huts on your property, anything that is sort of the homesteading version of mining. And that panel was fascinating. A ton of discussion around process heat and other sort of integrated use cases. We've seen, the senator from Tennessee, both senators from Tennessee actually have engaged really aggressively on Bitcoin and Bitcoin mining. We had the CEO of TVA at the event giving what I found to be, truly a profound discussion of where he thinks energy is going, and immediately understood that the role of a flexible consumer and the role of the miner is really a catalyst for change and towards the maturation of our electric system. That's not a static thing, right? We didn't wake up with the grid that we had 90 years ago. We've been iterating and improving components of that system all along the way. And so seeing the translation layer between some of the most senior business experts on the energy side grokking Bitcoin, basically at face value now, getting him in a room with miners. There's a ton of his customers in that room. Griid is one of them, but there are many others. And seeing the clarity that incredible energy professionals are viewing the mining sector with was hugely refreshing. So, all of that is super, super encouraging. I think the other macro topic that needs acknowledgement is just that, Bitcoin's, installed hash rate base has gotten escape velocity, right? The whole Bitcoin network is running, somewhere between 15 and 20 gigawatts. It's running north of 500 exahash. We're probably sniffing 600 at this point. The ability for the network to go up, 10% on a difficulty or a hash rate basis from here, the base that we're building off of is now so large that each of these incremental components of growth, we're just talking really big numbers. And that's exciting. It means that the security model for Bitcoin is incredibly strong. It means that the value proposition for sound money that can be transacted on a permissionless and censorship resistant basis is stronger than ever. And the level of professionalism that I get to see, both within our company, but also across our peers, is just really high. I'm really proud to call them, members of the same business community. So I think all of those things are significantly more mature than they were even the last time we had a conversation on the show.
Yeah, and it was extremely refreshing, the Energy and Mining Summit, the president, CEO of the TVA coming, really, I was extremely impressed by him. We can't talk about specifics of what was said, but I will say that his presentation and his earnest curiosity was refreshing from somebody in a position of that type of power, where you'd expect them just to be a politician, like figurehead of his business and just read the script, essentially. He was very engaging and, again, genuinely curious, which I was extremely encouraged to find. And then another thing with this whole theme that we're talking about here, it's like one of the questions we get at 1031 quite a bit from prospective investors is, well, like, nobody's adopting Bitcoin. Like, when are people going to start spending it? at the store, when am I going to be able to go and buy groceries with Bitcoin? You have to answer like, yeah, obviously it's not there. Not everybody has Bitcoin, but I think it's important to realize different types of adoption and the order of operations through which we'll get to Bitcoin's end state of full success, which is, yes, not everybody's able to spend and receive Bitcoin at the grocery store. However, on the earlier side of the order of operations is this mining, this distribution of hash rate, this growth of hash rate, and this integration with the energy sector. And the energy sector, I believe, has reached a critical tipping point of adoption that is not recognized by the people who just view Bitcoin adoption as, where can I spend it? Who's accepting it?
Yeah, I think, Bitcoin, the currency, it's like saying, where can I spend a barrel of oil, or where can I spend a T-bill, right? Like, that's not the metric that I think is meaningful today. I think all of those, transaction-based numbers and graphs, like all of that matters over a longer time scale for sure. But at the point where we are today, it's about getting Bitcoin onto balance sheets, whether that's household balance sheets or corporate balance sheets or state and government balance sheets. That's the first beachhead that Bitcoin really is crossing. And I think, we got a little bit sort of twisted up in the weeds of it all, earlier on in this great shared history of ours. But, the ability to spend Bitcoin is not the same as the ability to send Bitcoin. And those are different ideas. And so I think we're climbing the store of value adoption curve incredibly constructively. And so it's great for us to be able to see that. And I think you're exactly right. The market penetration that Bitcoin mining, is accomplishing today, along the lowest sort of strata of energy cost sources, whether that's here in the US or it's abroad, the penetration at those low cost, high opportunity points is enormous. If you're not thinking about where does Bitcoin mining represent value accrual, if you're, an intermittent generator, or if you're a steady baseload generator that needs to manage uptime, anybody who cares about power and uptime should be having a conversation with a Bitcoin miner, or be thinking about, how do I design a rate class that gets Bitcoin miners the prices that they need, which are, transparently the bottom of the barrel. But the trade-off there is that, my father, lifelong CFO, would always tell me that in any negotiation, you have to pick between price and terms. And I can tell you that on the mining side, we're very firmly in the camp of picking price and taking terms. And that's reared its head in the demand response adoption that we've represented already. We do it in the TVA version of that reality. The folks in ERCOT are doing that. And the folks in every power market in the US that has programs that offer, a demand response compensation kind of rate class or tariff, everybody wants that. So, the really interesting thing is to see the ability to deliver on the technical requirements of an actual demand response program, and then the desire to expand those programs to increase reliability and lower costs for the average user.
Yeah, just digging into this demand response use case in and of itself, you can already see Bitcoin miners beginning to affect change across different sort of power providers across the country. ERCOT, obviously, here in Texas, very advanced from the pricing signal perspective. There's APIs that are connecting to mining firmware. That mining firmware is reading the pricing signals and adjusting hash rate with those pricing signals almost immediately. Whereas if you zoom up to the TVA, it's a bit more manual. You get a call from the TVA a day or two before they expect you to turn down during peaks of demand where they need electricity sent back to the grid, and you have somebody go and turn down the operation or do that from a back end software solution. You can see there, like, you can imagine the TVAs looking at ERCOT and being like, oh man, look at how advanced this demand response system is with all these pricing signals. Maybe if we could build an API pricing service like that for the miners up here, we could be much more efficient.
Yeah, efficiency is the name of the game, right? Like these are assets that are already bought and paid for. All the transmission lines are bought and paid for. All the substations are bought and paid for. And so now that the capex is out the door for all of these electric systems, how do we get to a place where utilization is able to climb even just a few percentage points? Because at the end of the day, if you think about I think of sort of the world in terms of a nexus of contracts. There's a contract that your power provider signs with you, the ratepayer. I'm sitting in my house. I use Nashville Electric, and their commitment to me is really around power availability. So let's say the system gets super stressed and they've got to import power from MISO. Those megawatt hours are incredibly, incredibly expensive. And the price of those megawatt hours would be better, as a rebate to their flexible load customers rather than a forced import during the time when things are tightest. And so there's a really compelling economic case around why demand response is accretive, both to the power provider as well as to the individual ratepayers at the household level, as well as to the demand response program participants at the industrial scale level. That's found money for everybody involved, right? The power provider is lowering their cost. The ratepayer at the household level is raising their uptime and potentially lowering their cost. And the flexible customer is able to lower their costs as well. So it's this incredible, three-party positive sum equation that the power providers are able to offer once they've had the introduction of a truly innovative business model, which all the mining community believes, and rightly so, that they represent with this flexible load type of profile. And in addition to that, it's better for the generating assets. You don't want to turn those things up and down, as much as you might have to. And so, there's this other net benefit over the longer term as you continue into the useful life for some of these plants, which is that operating in an environment with a flexible customer is actually better for all of the hard assets that are being used to generate the electricity in the first place. So we're in this incredible virtuous cycle as symbiotic partners, being the power provider, the Bitcoin miner, and then the households and businesses that power provider serves outside of the flexible customer. So I'm incredibly motivated to keep working on what it means to reinvigorate some of these electric systems in a way that really benefits the entire kind of nexus of parties.
Wait, Harry, where's systemic risk to these systems? Did you not hear what the Department of Energy and the EIA had to say last week?
I understand that was an interpretation that was floated to the community. I happen to strongly disagree with that interpretation. I think that there's sort of I said this many years ago, but Bitcoin demonetizes the political class and remonetizes the productive class. And in keeping with that theme, the engineers will inherit the earth. And so that means the power engineers that work on these systems, the people with their boots on the ground, there's, I just found this out. I looked at what are some of the highest compensated roles that you could have in America? Cause I was just curious, what are the weird ones I don't know about that maybe I should have gone to school for? One of them is there's a guy whose job is, or a woman whose job is to hang out of a helicopter on, basically a tether with a chainsaw to manage trees on the high voltage lines, super high up in the air. They make like $400,000 a year. And so those are the people who I think we're building, Bitcoin mining for, because we make all of those roles easier. If that takes an education process in Washington in order to make that value proposition clear, so be it. But I think that, once you put the hard data, to these folks, I think the case for Bitcoin is really quite an obvious one. The ideological challenge that we might face is the sort of baseline assumption, which is that, nobody likes our pet rock. And I think we're really facing more of that perspective than any sort of legitimate concern around electric reliability.
Yeah. Bitcoin has no value. It's just a Ponzi scheme, a pet rock, if you will.
I don't know.
It's not helping.
Seems
anybody.
Like a lot of market participants who are willing to pay $43,000 a coin right now.
Yeah. They think it's valuable. They're parting dollars to get parting with dollars to get Bitcoin. But it is like we discussed this too on our panel the first day of the summit, but it is, like you said, we have this sort of pull between the productive class and the unproductive class. The parasitic class is probably more descriptive of what they actually are right now. And it's not just specific to Bitcoin. I mean, we can zoom out and just focus on energy more broadly. Like we talked about the example of, this wasn't on our panel, this was on the What Bitcoin Did episode, the live episode on day one in Germany. It's like over 20 years, they decommissioned, I think, 20 gigawatts worth of nuclear power generation, more than doubled their overall capacity, generation capacity over the first 20 years of the century, but they doubled their capacity with wind and solar predominantly. Turns out the sun doesn't shine that much in Germany and the wind doesn't blow as much as they like it to. And so you had a situation in 2002 where nuclear, coal, natural gas were 86% of the overall generation capacity. Today it's something like 34%. And Germany's got a systemic energy crisis because they don't have reliable power, because they refuse to, for some reason or another, lean into reliable energy sources. And say what you will about coal and natural gas and whether or not you think hydrocarbons are here to stay or on the way out. I mean, nuclear is a very obvious answer to a lot of these energy stability problems that the governments of the world seem to be neglecting for some reason or another.
You can't virtue signal your way out of physics, right? It just, you can't. And that's just for the climate folks out there, like that's the bitter pill, right? You're not gonna build enough wind and solar to solve this in any kind of meaningful way. And the cohort that drives me kind of the craziest are the ones who are staunch climate supporters who believe in the decommissioning of nuclear plants, right? These are assets that are fully bought and paid for. They're operating really, really well. They have an incredible safety track record. It's an American technology, nonetheless, that we were able to innovate on. And the willing sort of voluntary shutoff of these plants, it's despicable. There's really no argument for it. So, the playbook that we expect to see, and I'm thrilled to say that the Canadian folks are committing to extending useful life at some of their plants. There's folks at OPG who are committed to building SMRs, and they're going to do that in TVA. That's public knowledge. So, we are seeing, in California, we were able to avoid, the shutdown of their nuke that's in the Los Angeles area. So we're starting to turn this tide a little bit, but, anytime you got to turn an aircraft carrier, which is, really the Nuclear Regulatory Commission, it's a challenge, but by gosh, we're going to do it. So I think there is some daylight and some hope on this, but, the argument that we should shutter nuclear plants is like the single most asinine policy perspective I can think of.
That's literally suicidal, especially if you're going to virtue signal about transitioning away from hydrocarbons and at the same time decommission.
Which to be fair, like we're in favor of building a positive sum electric system. For us, that's meant a huge allocation to hydroelectric assets and raising the revenue profile that they're able to offer. It's a huge focus on nuclear, which we love. And there's really you can do well and do good at the same time. You don't have to not have it both ways. But unless you're investing in the baseload profile of the electric system, you're going to create instability and tail risk that really will be significantly detrimental at some point down the road.
Yes. Oh God, I'm getting triggered just thinking of the LNG export ban or new construction of new LNG export facility ban that came out a couple of weeks ago. It's nonsensical.
And let's put our carbon accounting hats on, right? If you're replacing a coal asset with a natural gas asset, your carbon intensity of that transition is incredibly positive. It just happens to run on another hydrocarbon, but a much better one from the carbon accounting perspective. So I think, we need to be very, very realistic about the physics. We need to create the demand for these types of flexible load consumers, which means innovating on the contract structure in many of the jurisdictions that are currently not set up to compensate flexible loads as fully as maybe they should be. But these are the tough questions and the hard steps that have to be taken. And environmental stewardship and strong business performance are not at odds with each other. We just need, sane, cool engineering heads to come together and design solutions that are as future-proof as possible. And shuttering nuclear reactors is the lowest thing you could possibly do on that list.
Yeah. Yeah, very Malthusian when you think about it. But on this tip, I mean, we had this discussion, and it was really interesting to see people from different parts of the world come to Nashville to talk about the future of mining and where it may proliferate moving forward. What are your views? Like, obviously, the United States, Texas, Tennessee, TVA, Kentucky, other parts, Georgia, have really benefited from the Chinese mining exodus that happened a few years ago, 2.5 years ago now at this point. Rack space is tight. It seems that Bitcoin in the mind of institutions is now a go. We got the BlackRocks of the world saying it's a good thing. And what I've been able to glean is that there are people in other parts of the world that are looking at Bitcoin mining specifically and saying, all right, it's time for us to develop a strategy, deploy some capital, and get some hash rate spinning up within our borders. How do you see this international competition for hash rate playing out moving forward?
Yeah, I think, to win in the mining business, you need to have a structural defensible advantage. And that can come in many forms. I think in America, we've got two great structural advantages, one of which are our capital markets, which are the best in the world. The other is that our energy assets are also world-class. And so what are the two key ingredients to a great mining business is well-capitalized access to energy. And so I think the U.S., has taken a leadership role on the heels of the China ban, several years ago. I don't expect us to slow down. Maybe on a percentage share basis, we're going to lose ground, but I don't think we're going to slow whatsoever. I'm very curious to see what's going to happen in some of these, really sort of oil state, wealth environments where there's obviously a huge amount of capital available to them because they've made so much money over the past years and they're starting to look down this diversity path for their portfolios. And, additionally, they've got access to a huge amount of incredibly cost-effective generation. The UAE is turning on nuclear reactors and a multi-gigawatt solar plant co-located with them. So that's a huge opportunity to monetize, via the deployment of hash rate. We've seen what Marathon's doing over there. Obviously, we've heard the news out of Oman. We've heard the news, in Dubai and elsewhere. So, I think, and then none of that's to say anything about South America, which has been involved in this both, above board and below board. There's sort of a gray market environment, historically in Venezuela. We're seeing large scaled operators operating, out of Paraguay now. We're seeing, the Africa trend that gridless is really spearheading take root. So I think, the exciting part is that the decentralization of mining, that narrative is very strong because there are structural opportunities to monetize energy in each of these regions. There's an opportunity to deploy capital in each of these regions. And there's going to be companies and individuals with a very broad range of risk appetite and operating model appetite to deploy across all of this. And so, all of it means that, we're probably going to see hash rate go up over time.
Yeah. And then you combine this with the fact that you have hydro boxes and liquid cooling immersion systems becoming more advanced, and you have the ability for the first time at scale to deploy hash rate in areas of the world like the Middle East where it was simply impossible due to the physical environment, the heat specifically, even down here in Texas. Yep. To some extent. Like obviously we have a lot of hash rate here,
sand,
a lot of
salt.
Heat, a lot of dust, but the industry, the picks and shovels part of the industry, building these facilities that allow you to mine in harsh environments has reached a point of maturation as well, where it's really going to open up markets that were previously inaccessible.
Totally. Yeah, there's a technology trend that sits underneath all of this. And, on the one hand, it's the efficiency.
All right, we're still recording. So little audio troubles there. Back at it. What were we talking about?
Yes. There's two layers of technical innovation that are happening that I think are going to facilitate broader availability of deployment environments. One of them is that the chips are getting more efficient. And so that just means the units of energy per units of hash rate produced over time. You're able to produce more hashes per unit of energy. The second is all of the technology that's wrapped around that, which includes things like immersion and things like hydro and filtration and all the different tools that are available to a mining operator in order to deploy in a harsher environment makes more sources of generation and more environments available. It means that there's more economic viability of places that weren't from an operational perspective, but maybe were from a power cost perspective historically. So all of this kind of rolls into the idea, that I think is the tailwind that we're all riding, across Bitcoin, which is more decentralization is likely because, more remote operations are viable. But then secondarily, just the gross hash rate securing the network is going to go up as well.
Yeah. Let's lean into the ASIC manufacturers. What are your thoughts on the duopoly, the dominated duopoly by Bitmain? Obviously, they've got the S21 series coming to market. Their pricing out of the gate with those machines was very aggressive. Many saw it as an attempt to leverage their economies of scale to box potential competitors out of the market. MicroBT is obviously the second largest player in the market, and they have a lot of happy customers. How do you see this playing out moving into the future? Does Bitmain just use their economies of scale to box people out? Is MicroBT beginning to make inroads with larger customers? Do we see Intel come back to the market? Avalon? Do any of these companies have a chance of competing?
I think that we're still early days. I think that, the manufacturing landscape could change dramatically over time. I think right now Bitmain is sort of winning the day as they have been for the last couple of years. I think MicroBT is doing a great job. The MicroBT units, are awesome. They continue to double down on reliability and performance at the cost of some nominal efficiency, which I think has been, a great strategy from them. You've obviously seen Riot roll into market with a huge amount of future order. And so I think that, MicroBT is certainly earning their scaled volumes as well. Do I think the duopoly is going to break in the next year? Not particularly. Do I hope that more competitive players enter the market? Always, right? I always want a more competitive market to be able to look at when I think about, capital allocation and hash allocation. But I think that, right now things, are reasonably healthy and competitive. What we're not seeing this cycle is kind of the price blowout that we saw in 2021, with units trading, significantly ahead of kind of, the future revenue profile. So I think, we're certainly healthier than we were a few years ago, but I'd always love to see additional players enter.
Yeah, I would agree there. It is crazy how efficient these machines are getting to. I'm just thinking through my mind, like the whole concept of ASIC commodification. Like, is that simply a natural catalyst for more competition when you get to a level where you can make an investment, a capital outlay in building an ASIC because you're confident that it's not going to make a step function efficiency improvement like the ASICs have in the past? Or does that simply allow the incumbents to just really dominate the market? Yet to be seen, but
yeah. I think, the good news is they don't let me program any of the chips. At least not yet. And if they do, we have real problems. So, I think there's sort of the mad scientists and deep technical experts that are working on it. I got to spend some time with Scott from from, oh, good Lord, I've lost the name of his project. But he's doing the open source ASIC project.
Not FutureBit. FutureBit? No, they're not open source.
Hold on, I can find this. So he's working on some open source pieces. I don't think transparently that it is any BitAxe. I apologize, Scott. It's just cool to see people working on stuff and tinkering and innovating along this. We aren't at the mature phase for this industry. We don't have the Intel chip or the HP, chip. It is an Intel chip that's in all of those units, but we haven't reached the full commodification layer. We might be at what I view as a long local maximum, which is really sort of the duopoly continuing to innovate. But we may see, another really interesting, breakthrough from a market dynamics perspective, that attracts additional folks who want to build down this development path. But unlike software, you don't get to put a software release out every 2 weeks. It's really, 6, 12, 18 month type of time scale to be able to innovate on hardware. And so, I'm very curious to see what emerges, really over the coming decade, if I'm being honest about timeline.
Yeah. The hash wars are upon us. Who knows? This could be.
Always has been.
They have been since January 3rd, 2009. But then you have just external factors, geopolitical risk. Who knows what happens in Taiwan with TSMC? Can they spin up a foundry here in the United States fast enough to deter any systemic political risks that would come if China were to do something there? Then, many people are like, TSMC is one of the greatest revenue drivers within Taiwan, so to think that China would just come and prevent that company from accruing tax revenues by selling their goods to market is a bit crazy as well. But these are unknowns that can affect the market. It's crazy to think the range of effects. While we were in Nashville, the weather was affecting Bitcoin hash rate. Cold weather down south produced a -4% difficulty adjustment, 3.9%, due to everybody engaging demand response. And that's why, I'm sure, I know that you feel this way too. It's just, I don't think there's a more exciting industry to be in than Bitcoin mining right now because of all these different variables you have to think about. It's certainly very masochistic as well, but it's never boring.
And it's honest. Right. Like what I love most about mining is that, I can't make my terahash hour. What I'm not going to do? I'm not going to outsell my, competitor for the next software sales deal and, sell $9 a seat for, 12 months, because I've got a better, CRM product in market. Right. Like, no, it's a pure, honest capitalist endeavor to be able to generate hashes more efficiently than the next person. And that's a really refreshing environment to build a company into, because you can see on a daily basis, if you're doing it the right way, you get a report card, on a very, very frequent basis, which is fun. And is very, very motivating. So I love that part of it. I agree with you. There's no sector that, I'd be more excited to be working in. It'll be my 5-year anniversary at Griid next week. Official start date anniversary. I was wrapping a consulting agreement before I joined, so I really started 3 or 4 months before that. But this is what I've chosen to dedicate my life to building within a proof of work system, and really couldn't be happier to get to work on this every day.
Yeah, God, there's many routes I want to take this on. I guess since this is a mining focused podcast, obviously the halving. It's about 75 days away, which is not that much time. What should miners be doing? What are miners doing to prepare for the halving? How may it affect mining businesses?
Well, the known effect is that the block subsidy is going to get cut in half. It's bittersweet, right? Like on the one hand, we're going to earn less Bitcoin as miners unless fees do something quite dramatic. Than we did the day before the halving happens, or the block before the halving happens, as the case really is. but that's the bitter. The sweet is that Bitcoin's monetary policy gets proven every 4 years. So every 210,000 blocks, the Bitcoin Fed meets and agrees on a new issuance decision, and that issuance decision happens, programmatically. And so being able to watch the monetary policy happen in real time, and with near absolute certainty, is one of the most high impact pieces of how Bitcoin works. And getting to see it work in real time is a powerful and meaningful thing. That's my ideological answer. But tactically, I think we've seen a lot of miners across the industry start to roll into higher efficiency machines. I think that's one way to sort of halving proof your operation, is to continue to invest into the fleet's efficiency. Beyond that, we at least think all the time about, the best way to be prepared for the halving is to be cost conscious. And that starts with the power cost, but it really rolls across everything the business spends money on. And so being, laser focused on downside risk and cost is the best tool, available in conjunction with managing the fleet's efficiency in order to be resilient across a reduction in potential revenue. Now, the purchasing power under the last epoch was greater from a mining revenue perspective than, the purchasing power in the 12.5 Bitcoin block epoch. And so, we may see a similar dynamic play out across the 4 years after 75 days from now. So, I think there's still a lot of, dynamic components of the market. We haven't even gotten into the expected fee revenues that we might see with additional adoption. Or additional JPEG degeneracy, however you might think of it. But at the end of the day, block space is scarce, and Bitcoin is an incredible asset to move from point A to point B. And so the fees that folks are willing to pay to move their UTXO, I think, is a place where a huge amount of value is provided by miners securing the movement, and the availability of that scarce block space. So, it's a simple topic because the monetary policy is dead simple, thanks to Satoshi, not Craig. And it's also a very complex business operating environment because there's a bunch of moving variables. So it really is a three-body problem between fees, Bitcoin price, and network hash rate. So you're managing a lot of uncertainty around that period of time, but we pride ourselves to sort of always be halving. And so, we'll start preparing for the halving after this one, the moment this one happens.
Always be halving. Sage advice. That is the environment leading up to this halving is different than the two that I've been a part of since I've been following Bitcoin, because you have this fee pressure from the JPEGs and all that, and it's nothing too crazy right now, but it did get crazier a little under a year ago, and at times throughout the last year did provide significant revenues to mining operations. The price is up 150% since January of last year, and it seems like we're hovering in the low 40s. The GBTC bleeding seems to be coming to a slow, and the ETFs seem to be net buyers of Bitcoin right now, potentially into the future. Like, is there a situation where fees are pumping, the price is doing really well, the halving comes, and you have the situation where it's not as, I don't think cataclysmic's the right word, but it's not an event that's detrimental to as many operations as it has been in the past. Something that people should be thinking about.
Yeah, I mean, look, like we basically had two halvings last time because we saw price go from 6,500 to 3,500 a month and a half before the halving, and then we bounced back up, and then we halved. So you can kind of get to halving economics multiple different ways, and so if you're not built to be resilient across those different cycles, it's going to be challenging, regardless of if it means price getting cut in half or block subsidy getting cut in half. It's kind of all the same, the same net. from, the miner's perspective. So, it's going to be dynamic. It's going to be interesting. There's going to be a lot of conversation around it. It's critical to remember that it is beautiful to watch Bitcoin's monetary policy happen algorithmically without a central planner involved. And it's about survival and putting yourself in a position to be able to thrive, during periods of really constructive mining economics.
Yeah, first halving where Bitcoin stock to flow will be higher than gold's. Wonder if that's some mimetic force.
Red dot, blue dot, green dot.
Is that the one stat? They're like, people.
It's the plan B. It's the plan B dots.
Yes, we're going all the way up to orange.
Red dot.
No, but is this something as simple as, people are like, wait a second, Bitcoin is now officially more scarce than gold from a supply inflation rate that people are like, oh man, maybe I should get this. 2024 is an interesting year. Another beautiful thing of the halving is they line up perfectly with U.S. presidential election cycles. And this one,
for now, unless we have a lot of accelerating or decelerating difficulty adjustments, we could fall out of whack, but I don't think we are likely to.
No. And this will be, we don't like to get political too much on this show, but this seems like it could be a pivotal election for the Bitcoin industry broadly, but specifically the mining industry. It seems like, again, the actions from the EIA last week were dictated down from Elizabeth Warren in a certain capacity. And it seems like this current administration really does not like Bitcoin. And I think that's what a lot of people are asking themselves behind closed doors is, damn, like, do we need a new administration to just let this industry run? And then you think back to Trump's first term. If it does turn out to be Trump versus Biden, which seems like that is the case, he wasn't really supportive of Bitcoin either. He had Steve Mnuchin as his Treasury Secretary who hated Bitcoin. Trump explicitly said that Bitcoin was a threat to the U.S. dollar reserve system. And so even though we don't like having to deal with the political part of life here in the United States as an industry, I think it is becoming abundantly clear that we do have to play the game to some extent, just so that they will leave us alone as much as possible.
I'm with you. Politics is definitely not my bag. But the goal that I have, I'm always happy to engage with anyone and everyone on this stuff, and all I want to do is tell them, don't ask me the questions, ask the people we buy the power from. What do we do for the community? Are we good? Are we net benefit? Are we an asset? I'll never forget we had a quote from one of the CEOs of the local utility that we, have an operation at. And it was right when inflation was peaking at 10%. And he called us and he said, when this kind of stuff happens, I'm really left with a couple of choices. I can sell bonds, raise debt. I can raise rates. I can lower quality of service, or I can go find a Bitcoin miner to bring to my area. Those are the only ways that he had in his mind to fight inflation. And he said of those four options, he would vastly, vastly prefer option 4, where there's a differentiated customer that he can recruit to sell power to. And so it's telling stories like that as many times as we need to make people understand that, we're not parasites that are suckling on the lifeblood of the American electric system and the economy. We're an asset that pays revenue and that generates, flexible, sustainable load that is an asset to every electric system that we enter, so long as the contracts are structured the right way. And so what that means for us is we just want more flexibility and more credit, both financial and social and political, for the flexibility that we offer. And I don't think that's an unreasonable perspective to take. And we're definitely seeing, a lot of serious consideration around that value proposition taken up by the technocrats who run the actual, generation, transmission, and delivery services that keep all of our lights on.
Yeah. sometimes you have to take a step back because it's so obvious to us. It's like, how do you not see this? Do you want to see this?
Well, Marty, how do you manufacture a pencil?
It takes many moving parts.
No idea. I have no idea. When I go pick up a pencil, I have no idea how that was made. I assume that the vast majority of people I will ever talk to have the same level of understanding of how the manufacturing process for a pencil works that they do with what happens when you turn the light switch on.
Yeah.
Right. It's an unknown thing. My dad believes that he's reducing, the carbon intensity of our household by turning the thermostat down a degree or two in the summer or in the winter. Right. So like the level of understanding and the level of transparency, and he doesn't think that way anymore because I've, locked him in a room and yelled about it long enough. But these are topics that are not taught to us as young people. They're topics that are wildly esoteric for the vast majority of people, certainly in America, if not on planet Earth. Nobody knows what happens or why their light switch works. And so that's the fight that I'm excited to take on, which is I don't believe that look, I didn't go to school for electrical engineering. I went to school for Keynesian economics, and I somehow shook loose of that horrible fate. And so if I can learn how the electric system works, I have no technical background whatsoever, but I read a bunch of books and asked a lot of dumb questions and arrived at something approximating a level 1 understanding of how electricity works in America. It isn't that hard.
No, I seriously been thinking about this recently. Like, we need, in terms of curriculum, like, people should know how money works and people should know how energy works. Like, that should be high school classes, mandatory. Know how your money works, know how your energy systems work, because they are the base layer of the economy that you're going to go out in the world and try to be productive in. And the fact that
I swear I didn't set you up for this, but Griid's mission statement is to build a generational company at the intersection of energy and money.
Yeah, that's
our goal. Our goal is to build a company that sits right on that street corner. Energy going this way, money going that way. Right on the corner is Griid and Bitcoin mining.
Yeah, it's happening. It's going to be a long journey. Not for Griid, but just for all of us in general. Young men. And you see this hairline? It's not getting any. It's not coming down.
Better than LeBron's.
Closer to my eyebrows. That's true. That's true. One other topic I want to talk about with the emergence of the ETFs. How do you think that affects stocks like MicroStrategy and public mining stocks that have historically been used as a way to get exposure to Bitcoin without direct exposure via public markets?
I mean, look, I think that we have evidence now, right? We saw the ETF come out and we saw a bunch of those stocks, especially MicroStrategy, go down. I think MicroStrategy was viewed basically as a holding company for Bitcoin. Now they deserve some premium because they're able to lever into some Bitcoin. And I forget who did this analysis, on x.com, but, they basically looked at the sats per share that you own if you own, stock in MicroStrategy, and that number actually goes up based on the way that they've issued new stock, and bought Bitcoin with it. So I think there's some interesting sort of deeper fundamental analysis that's going to go into the decision to own, a stock like MicroStrategy versus a share of we'll talk about the Bitwise folks. We like BitB and we like, the ARC folks and have relationships across there, but I love that they're funding developers out of those management fees. I think we've seen the premium come out of MicroStrategies to a large degree and enter, ETF land. I think the miners are a more interesting case, and I just look at them broadly, but I think it's an opportunity for differentiation, right? You're taking sort of some of the market beta into a different vehicle, but maybe that means there's more room for the market alpha for a differentiated operator to really show their chops, or many of them to show different chops. There's a lot of different kind of operating models across the different pubcos that are out there. But yeah, I mean, it's an opportunity to demonstrate differentiation and, attract people to those names or explain to people why, being able to generate revenue in Bitcoin terms and do so on a profitable or highly profitable basis is a compelling equity investment. And so maybe they can get looked at more like companies and less like Bitcoin, holding companies.
Yes, I completely agree. Which is good for the market too. Particularly the differentiation that's going to be necessary to set yourself apart in the world of public markets. Underclocking strategies, getting more ingrained with demand response systems, becoming energy providers, maybe getting acquired by an energy provider, becoming part of that stack. People are going to have to get creative, which should be a forcing function for a more efficient mining industry and a more healthy Bitcoin overall at the end of the day.
And a more fulfilled investment community, right? Like I think there's a lot of sort of, well, is the ETF like bad for Bitcoin? I'm like, I don't know. I like when people have an access to more choices, right? At the end of the day, like, I don't know somebody's personal situation, and maybe the ETF is the most, obvious and greatest thing in the world for them. It's not how I would choose to get exposure to Bitcoin, for me, because I can't, engage in the self-sovereign component of it. But I'm sure there's lots of people out there who that's a much more constructive product, and they want the price exposure to Bitcoin, and that's really meaningful for them, and that's great. So I think anytime that the market's able to make better, more informed, and broader choices across a broader range of vehicles, like, I think that's net positive, and is in keeping with sort of the libertarian on my shoulder, which says that people deserve more choices and more freedom to choose, and that's positive. And then ultimately the market, over time, will move away from being a voting machine and moving back towards a weighing machine. And that's where sort of the truth gets to be, litigated, which is in the market for ideas first, and in the market for financial outcomes second.
Yeah, which is a perfect segue into what we can end it on, which is the fact that you joined 1031 as an advisor as well. We've been talking behind the scenes for, gosh, feels like years now, but it's official.
It has been years. Can confirm.
It's official now, and that is our goal, our aim, our mission is to go out and find the entrepreneurs that are building out the critical Bitcoin infrastructure that will lead us to a Bitcoin standard, make it easier for people to access Bitcoin, to use Bitcoin, to leverage Bitcoin, to mine Bitcoin, whatever it may be, and to give the market more options at the end of the day. And we're extremely excited to officially have you on board. And I think the opportunity that lays before us at 1031 specifically is extremely exciting as well. I said mining is the most exciting industry, and I truly believe that. But having the luxury of getting a view into every other sector of the Bitcoin economy is extremely rewarding as well. And couldn't be happier to have you on board to advise us. I couldn't be
happier. I couldn't be happy. No, I think, any time you get to work with a market leader, you take it, right? You guys have done so much hard work. John, Jonathan, Grant, Odell, and you obviously, as well as all the LPs, have just done a phenomenal job putting together a really thoughtful and mature, investment platform. Obviously, that's skewed significantly towards venture thus far, because I think, Bitcoin is still in venture land, where, the biggest companies are being built or yet to be built. They haven't reached maturation by any stretch. Thrilled to obviously be a portfolio company at Griid, but for me, like, what's most exciting is getting to work with, founders, right? The startup journey is, not like anything, nobody could have told me what it was going to be like on the way in. And we're not done yet by any stretch, obviously. So getting to share, the hard lessons, the good lessons, what did we do right? What did we do wrong from along the way with other founders, and being able to kind of take the long, dark night of the soul type of call, that's what is really exciting to me, because it's really hard, and being, a founder or co-founder of an early stage company, can be extremely isolating. And so having some, folks in the been there, done that club who can sit alongside you and hold your hand when you're facing kind of the toughest pieces, that's so exciting to me. Getting to work with you guys on, on fundraising and on allocations, like all of that kind of stuff is something that, that I'm tremendously passionate about, along with, working directly with founders. So, couldn't be happier, couldn't be a more symbiotic relationship, between Griid and 1031 and between me and 1031. So thrilled to be here.
Yeah. And I think that's another thing that is really unique about the position that we're in, just as Bitcoiners more broadly, but 1031 specifically is, yes, we're a venture fund, the portfolio of companies that we've allocated to. But in your incumbent venture space, it's usually spray and pray across many different verticals, many different subsectors of companies doing wildly different things. But with the focus that we have at 1031 on Bitcoin specifically, it enables us to sort of enable the portfolio companies to help each other out where they can and to give that advice. Obviously, very small industry right now, but we have a very large goal and very similar problems. I mean, last year at our Bear Claw portfolio retreat, the topic of the year was banking relationships. That's something that Bitcoin companies have been targeted, whether it's explicit or implicit is for others to determine, but isn't easy still for many companies to get banking relationships in the space. And just having a focus and being able to have this cross-pollination of ideas and experiences among portfolio companies is something that I think is unique to what we're doing here.
The other and this is kitschy, but I'll say it anyway, which is like, Bitcoin is a social hack where when I meet other Bitcoiners, I'm like 90% of the way towards friends. When I meet other Bitcoin entrepreneurs, I'm like 97% of the way towards friends. So, being able to kind of self-select into a group of people who are convicted enough to be Bitcoiners in the first place, but then convicted enough to build companies around Bitcoin, it's just rarefied air. Whether you're a portfolio company at 1031 or not, I just think, the founders and employees at Bitcoin companies are a pretty special breed. And it's just the most gratifying thing to get to be around those kinds of people all the time.
You got to be a little crazy, which is good. I like crazy. It's
you? No.
Yeah. Oh yeah. Yeah. You couldn't tell. That is.
This was a Marty Jones free episode.
I've got the white collared shirt on.
You got the button down on.
I've got the button down on. I've got two buttons unbuttoned here, getting a little loose, but that's it. It's Monday morning. It's Monday afternoon now. The morning flew by.
Yeah, today ran away.
Keeping Marty Jones in the cage for this one. What haven't we talked about that's on top of your mind? You think maybe we should cover? It doesn't have to be mining related. It could be Bitcoin related.
I think this is a good kind of time to remember that, lower your time preference. Bitcoin comes at you super fast. And so cherish these days of like quiet in the markets. It's great to be bouncing between 38K and 45K or, 42 and 43. Like these are calm waters that we're in right now. And they won't stay calm forever. So, cherish the peace of mind that you get, on these kinds of days, and remember that Bitcoin is the longest game we've ever gotten to play.
Yeah, it gets crazy when the price starts starting.
Yeah.
Focus.
Productivity down, price up.
Well, anybody out there building a company, just humbly stacking sats, just prepare for the distractions, mentally prepare, especially if you're running a company. Let your employees know, let your team know. Things are going to get crazy. You're going to get the pull of distraction pulling you day in and day out as we're getting large green candles, large red candles up and to the right. Buckle down and try to focus. Anticipate.
Mm-hmm.
Exactly. Focus when it comes, because we got a lot to build.
we've got a lot to build.
Harry,
The future won't build itself.
It's not. It takes individuals like you.
And you.
Many other people out there. We're doing it, though. We're winning. We got people working out here in the Commons, working hard. You're in Nashville. The park is full. You're not there, but I was on a call with somebody earlier at the park, and I saw it was full. We're doing it.
I went in there. I had to do a little bit of stuff last night. I got to the park at like 8:00, and there were like 6 cars there, and there were like 2 conference rooms lit up. People were working. Like, the state of our network is strong. This is what winning looks like. It's Bitcoiners who can't sleep on a Sunday and have to grind on their next, whether it's their next release or their next slide deck prep or whatever. Like, they're grinding, and our enemies aren't. And so we're going to outwork them.
The momentum is building. It's going to be a good year. Harry,
It's going to be a good year.
Thank you for joining me. We can't wait 2 years for the next episode. That is too long, sir.
We'll put it on the calendar. Less than 2 years.
Yes, less than 2 years. You heard it here first. That's all we got today, freaks. Peace and love.